Downgrading both of these IP and PKG to underperform. I assume that's because you see a slowing economy, number one, and number two, basically an idea that they have a lot of inventory that they bought that they've got to work through, right? Or that they sold, rather, that's out there.
Sure. It's all of that, right? I think it shouldn't be a surprise. We got some pretty clear demand signals with a major input for containerboard collapsing the last 2 months. And we reached out to some of our contacts that are in the industry, and they're seeing exactly that, where orders were really strong up until June, started to weaken, and it's been really soft since July. And there's just a massive glut of inventory, and they're just trying to work through that. And typically some of the smaller players that are able to kind of cut a deal in the spot market or exports do not have that avenue just because there's so much inventory in the channel right now. So, as you kind of pointed out, Tyler, accurately, containerboard, cardboard box is a pretty good proxy for the economy. And it shouldn't be a surprise, right? FedEx cut numbers last night, and you've seen the retailers like Walmart and Target reset expectations a number of times right now.
Should investors expect a dividend cut here?
No, I mean, certainly IP went through that the last cycle, but I think the balance sheet for all the big public containerboard producers like IP, Rock, PKG have pretty healthy balance sheets. Cash flow should be pretty solid. So we do not expect a dividend cut.
So how close a proxy for the economy are these companies? Are they really just directly correlated or what?
Pretty high. The correlation is pretty high. If you look at the end markets, it's going to be pretty spread out. You got staples, food, beverage, right? If you go to a grocery store, you'll see produce in the box, like cardboard boxes. I'm sure you and your wife shop at Amazon, right? So it's a pretty good indicator for pretty good indicator for the economy, and certainly got some durable good exposure. So when you saw Walmart and Target cut back and destock earlier this year, the containerboard guys certainly felt it.
Yeah.
And we're seeing that dynamic accelerate in recent months.
A box a day keeps the gremlins away.
What about what about Philip, the export market? I mean, is that just collapsing as well?
Yeah, that's a great question. What was shocking to me was when we did reach out to some of our contacts that are big in the export market, the message was the same. The market was really tight up into June, July, and everything's grinded to a halt. And the big producers like IP historically have used the export market as a relief valve. But that option's not really available because China's really weak, right? A bunch of lockdowns. Europe, certainly a weak backdrop, even Mexico. And everyone's working through a glut of inventory. So the export markets are pretty squishy right now. So we think it's a pretty good read for the global economy.
Very quickly, if demand falls, how much will pricing fall?
Great question. Peak to drop in past recessions, about 20%. And what makes it a little trickier right now is there's about 5 to 6% of capacity starting to come on as we speak. So weakening demand, a lot of inventory, and capacity coming on is usually not a good combination for any commodity, including containerboard.
Philip Ng from Jefferies, thanks.